Hello, everyone. This is Personal Finance for Us, and today we are back with the last piece of the financial defense puzzle, and that is going to be disability insurance. So, without further ado, let's get into the video. So, some disability statistics. So, let's get into why do we need disability insurance, or at least certainly why. If you don't have any, you certainly need to consider it. It is estimated that 1 in 4 adults age 20 will have a disability event within their working years. Kind of a weird way to say that basically if you're a working age adult, there's about a 20% chance that you will use your disability insurance at some point. Depending on what sources you look at, they say the claims often last anywhere between 13 and 34 months. Interesting statistic, mortgage foreclosures due to disability occur 16 times as often as they do for death. So last time we talked about the importance of life insurance, but you're actually more likely to lose your home because you were unable to make your payments due to disability rather than your family losing your home because of your passing. So while we did discuss the statistics of the chances of something happening to you a little early, it's more likely that something's going to happen to you and you survive it rather than it kill you. So this is why we're going to get into the importance of disability insurance today. And more than 40% of full-time workers do not have coverage, despite these statistics, in the event of a short-term or long-term disability to protect against loss of income. So, there's generally 2 types. You've got short-term care and long-term care. Short-term care disability insurance usually provides coverage for about 3 to 6 months in the event of injury or illness. Long-term disability typically kicks in after 90 days, after that disability has been claimed. And both types of insurance have what is known as an elimination period, which is the period of time between the claim and the payment. So short-term disability, since it's shorter term, generally you're going to be looking at more like 14 days, whereas that 90 days we mentioned in the last bullet point, that's your elimination period for your long-term disability insurance. Short-term disability insurance is often provided by employers, but it can be purchased separately. The problem with short-term disability insurance, though, is that it's often inadequate since, as we discussed in the last slide, that most disability claims last for longer than a year. However, it can be used as a supplement if necessary. So, as we discussed, short-term care, that's going to be 3 to 6 months. Long-term care is going to be after that, so you can use it to supplement to get you to that 3, 4, 5, 6 month period. Now, as we talked about with baby step number 3, effectively, if you have a fully funded emergency fund, you can skip short-term disability because effectively you have self-insured. Your emergency fund's built to last you 3 to 6 months, so that will carry you through until long-term care kicks in. With long-term disability insurance, it is important to pay attention to your elimination period when you're signing up. 90 days is the most common, but they can range from as short as 30 days to as long as 2 years. So definitely make sure you pay attention to that elimination period and to make sure that you are prepared for that. And given those statistics we talked about at the beginning of this video, LTD just makes sense since there is a 20% chance that you will be out of work for greater than a year due to some sort of unfortunate disability event that might lead you to not be able to work. So the other thing to note with long-term disability insurance is that you can choose how long that benefit period lasts. So the options given are typically 2, 5, 10 years, or until you retire. As far as payouts, disability insurance generally pays 60 to 80% of your income. Short term, since of course it's short term, is gonna be a little bit closer to that 80%, while long-term disability with it, you being on it for a longer period of time, is going to pay closer to 60% in most cases. It is often untaxed. However, that might be guided by if your plan is paid with pre-tax or post-tax dollars. So if you are paying through your employer and that money is being taken out before taxes, you may have to pay taxes on that money. So that is something for you to be aware of. So long-term disability should absolutely be a mandatory part of your financial defensive plan. Short-term disability can be self-insured. Coverages usually last 3 to 6 months, which is what you should have in your emergency savings fund. And when deciding on insurance, remember that the goal is to let the insurance company handle the big stuff. We're building wealth in order to handle the small stuff. So that's really the goal. When small things happen, we have the finances to take care of it. You have the finances that if you can't work because you broke your arm for 6 weeks, 8 weeks, you have it covered. It's not a big deal. So we buy insurance to let it take care of the big things that we really, truly don't expect to happen in our everyday lives. So that's it for this one. Super short video today. I hope this video helps, as I hope they all help. And once again, here are our list of resources. You can go to any of these links, do some more reading on both short-term and long-term disability insurance. This has been Personal Finance for Us. I will catch you guys in the next video. Peace.